Welcome to another webinar from CPGmatters. I'm your host, John Karolefski. Thank you for joining us. Our topic today is Mastering Retail Media Budget Planning. But before we begin, here are some housekeeping items. Attendees are in a listen-only mode, but this conference is interactive. If you have questions, and our speakers love questions, please type them in the chat box in the lower right of your screen. We'll answer them along the way or at the end as time allows. Now, this webinar is being recorded. Attendees will receive a link to the webinar early next week. Joining me now are Bradley Keefer of Keen Decision Systems and Nich Weinheimer with Skaii. Bradley, the podium is yours.
Thank you, and thank you to CPG Matters for hosting us today. I'm excited to have a conversation with Nich from, one of our partner counterparts over at Skaii today. And just to introduce ourselves, again, my name is Bradley Keefer. I'm the Chief Revenue Officer at Keen Decision Systems. Keen is a solution that bridges the gap between ROAS and P&L. And really what that means is that our solution is very much focused on providing revenue forecasts with the belief that marketing is the most impactful lever that folks have to pull in order to drive top line and bottom line growth. And the way that we do it is we're focused very much on marketing and media optimization. And again, as I mentioned, I'm joined by Nich here from Skaii. Nich, you want to introduce yourself?
Absolutely. Thanks, Bradley, and thanks to CPG Matters as well for having us. My name's Nich Weinheimer. I'm based in the Seattle area, and I lead strategy for Skaii, the technology formerly known as Kenshu. You may remember us over the years for our search advertising technology, social advertising technology, and then over the last 6 or 7 years, I've had the pleasure of pivoting our enterprise advertising stack into the retail media opportunity, starting with Amazon, building partnerships with Walmart, Instacart, Criteo, CitrusAd, to where we now have more than 80 retailers in our platform for planning, forecasting, and executing those investments in those media programs, again, across that full stack of search, social, retail media, and even apps marketing. So our perspective on this conversation is an interesting one, with more than $8 billion in management in our platform, leveraged by agencies and brands that license our solution. We're excited with all the things that Keen are working on, bridging that gap between ROAS and P&L, and excited about the technology we bring that pairs well with it. So want to move right into it. Topic obviously being retail media. There's a huge amount of buzz in the industry about retail media, about how to rationalize these growing investments. We've all seen the kind of macro headlines of $100 billion market that's kind of careening in our industry, and requiring a lot of change management and growth within CMOs organizations, and figuring out how to rationalize those investments that are being asked from retailers of brands in terms of growing spend through these retail programs. Retailers are becoming publishers. There's a lot of complexity and fracturing in the market, and the Internet Advertising Bureau is actually really trying to figure out, with a number of partners, industry players, how can we create some standardization in the face of signal loss? Third-party cookies are sunsetting this year, other identifiers from core platforms. But really, these retail media networks provide that interesting window and direct connection to the consumer, effectively renting that first-party data that the retailer has for the brand to be able to directly communicate and market to the customer. And that's a fundamental paradigm shift in how brands and retailers are sharing the onus of marketing to the consumer. And that power and transparency and control is really valuable. But figuring out how to manage those investments, across all these fractured retail media opportunities that are different, is a big problem, big question, and a lot of smart folks are working on it. Just as some further backdrop, we ran a survey this year, and it's our third year running the State of Retail Media survey in our industry. And we asked kind of what are the most important marketing channels for brands and agencies. Retail media has perennially been on top of that stack. Along, a lot of this follows some of the clear kind of measurable funnel opportunity. but it makes sense why it's so important. It's working really well. More than 77% of the respondents of the survey said that it's at least exceeded or met the expectations that they had for those investments. Yet still, as the opportunity within retail media expands and grows, there are challenges that come into figuring out, how do I make data-driven arguments for where to spend these dollars? How can I measure them most effectively? Especially as this concept of retail media is expanding. What might have started in your organization and thinking about managing search on Amazon or another retailer has now shifted into, all right, what's our retail media strategy through social channels, partnership with retailers, or even in-store, right? This is becoming a full funnel, more programmatic effort for a brand organization, many of whom never really kind of directly managed performance advertising or typically lived in kind of brand marketing efforts in the past. And retail media has really expanded the notion of this connection between performance and brand, and provided, yes, a lot of transparency and control to brands, but also a big complex problem to understand kind of how much of this, should they be rationalizing, what really is retail media. And some of the best thinkers in the space are the folks over at Luma Partners, looking broadly across the industry. We've all probably seen Lumascapes of different parts of marketing and advertising technology. And I like the way that they talk about this notion of commerce media. When you think about, kind of expanding the idea of retail media into really all of the different kind of channels through which dollars and budgets are invested, not only across retailers, but even into other traditional digital kind of vertical columns here: paid search, social, app marketing, even open web and streaming TV. This is becoming that full funnel commerce media opportunity that brands are having to rationalize. And I like the way they talk about it being both a channel and a layer, right? Retail media, sure, is investing through retailers, and that's kind of one channel. But the layer that really makes retail media, or really a commerce media opportunity, truly valuable is that first-party data that is available from the retailer for a brand to effectively rent, if you want to think about it that way, plumbed in a different way than maybe you've leveraged third-party cookies through a DSP in the past, to address that retailer's really well-curated customer file across all of these different potential channels. So I would even go one step farther as these conversations mature, to just talk about the notion of first-party gardens. In a future without third-party cookies and the ability to effectively buy audiences, any organization that has millions and millions of eyeballs that can be curated and cut into audiences, that could be a financial services company, they become very valuable portals through which to buy media. So just setting the table a little bit about how important retail media is in our industry, how it's expanding in terms of the breadth of what can be addressed across the entire funnel from a digital and offline media opportunity. But I'll pass it back to you, Bradley, as we think about how do brands rationalize where all these budgets go? How do we begin this big calculus problem?
Yeah, I think for me, it starts with like the people and the process and the teams that are in place. Honestly, so Keen's done a lot of work, and with our partnership with the partnering group, we've actually released a webinar on this topic that starts really this conversation, which is, so we all know there is an expanded number of retail media platforms that are existing. We all know that our budgets right now are being scrutinized because of where the economy's at. We all know there are more and more decisions being made, and we're trying to make those decisions in silos. And we're trying to make those decisions with team structures from the 90s. It's like, it'd be like cereal companies trying to operate, their marketing budget by spending on TV like they had in the 90s. It's like, it's not the same time. And we still get some of these organizations that Keen works with that are set up in this like really siloed ways of thinking. And what we're seeing now is this growing trend away from a traditional CMO. In fact, there was an article I was reading the other day, I think it was in Forbes, about UPS, they're the latest to kind of cut their CMO, and the others who are thinking about this like chief commercial officer. And really what they're trying to say is, like, at the end of the day, what retail media is doing is enabling us to say, we've got a single brand, and that brand has a budget. And that budget needs to be executed to drive units and drive brand. I think one thing that we found, in some of the work that we've done with the organizations that we're working with, is for brands who are heavily reliant upon their agencies, they just don't know the brand objective or the long-term plan as much as they possibly could. They're looking at it very transactionally. And they're looking at it from this perspective of like, hey, I'm driving against CAC and I'm driving against ROAS. And all of that really like leads to these siloed decisions where everybody comes to the table and says, yeah, but I'm fighting for my portion of the pie, rather than saying, we're in service of the same brand with the same revenue objective. How do we use these levers to be able to drive toward the success? So, Nich, is there anything that you guys are seeing at this on Skaii to be able to like talk through what you think the agency brand relationship is doing to evolve, or what the organizations are doing to evolve? Are you seeing that chief commercial officer replacement of the CMO, or like what are you guys seeing today specifically in the retail media space?
Yeah, I think it kind of boils down to how can you democratize data effectively, especially if you do have an agency in play. To your point, I mean, the KPIs that are being managed by an agency are very important, and the KPIs that the internal brand teams are measuring, third-party surveys, et cetera, are extremely important as well. But if you're not tying together, let's say the JVP and some of the business data that is important to how the brand team operates with how your marketing execution arm is actually, playing out the ultimate program, or giving them even goals too that are, down to the product level, around profitability and other metrics that perhaps are less important to them driving performance of media, then they're managing in a vacuum. And I think what we see as a platform that tries to help solve for that is more and more intelligence, I guess, on both sides of the coin in terms of how you can really tag the programs effectively with business data and that type of intelligence, drive actual planning and forecasting efforts with the benefit of the depths of data and insight that you guys bring, and then what we do on the intro level.
Yeah, and that's where I think it really leads to like this challenge, which is that if you look at like people, process, tools, people, process, culture, like whatever like cliche phrases you want to use of like the big things people should be looking at, is like it's a new world in which we live in. There's not a shortage of content that's talking about like it's a new world and it's going to continue to be disruptive. And the challenge that we're seeing right now, and I think it's leading to some of the earnings reports that have been coming out recently around like the folks who are leaning into marketing are finding that it's like, hey, this marketing thing works. And then there's other earnings reports from other big CPG companies that we're reading that are like, we're in panic mode because like we're in unit, right? Like we got to drive toward units. And it's like, we got to do that through bottom of the funnel activations on trade and discount. And it's like, right, but like your price is being forced to come back down. Your margins continue to be high. And at the same time, the marketing team is sitting there saying, to a CFO, I've got this tool that's measuring these KPIs and like they're all reporting that we're doing an amazing job and we can make incremental changes. And the CFO stops marketers and says, yeah, but if I look at the spreadsheet right now, the P&L isn't reflecting that. So where's the disconnect that exists in the MarTech stack or in the process or in the people that says you're all reporting that our business is doing amazing, but if I add up all of our ROASs, how come our top line is not going up at the same level, right? So what's that disconnect? And what Keen is really focused on is this like holistic view of investment strategy as it ties to the P&L, where we're trying to say if we centralize those decisions around the total brand revenue, and we start to look at the P&L at the total brand level, and then the P&L, to your point about JVPs, at the Walmart level, the Amazon level, the Target level, D2C channel, like what is that still doing for some of these brands? It's kind of mixed. And then you get to the online and offline. So you get all these different P&Ls that are kind of competing with each other in service of the same master brand at the top. But when you have a siloed organization that's focused on ROAS, and you have a siloed organization that's focused on maybe the wrong KPIs, backward-looking ROIs, it leaves you vulnerable. Right. So it leaves you in that vulnerable state where, as a marketing leader, you can't defend the decisions you're making. They might not be wrong, but you don't have the tools and the systems to be able to kind of, talk about this the right way. So what it leads to is marketing budgets being cut. It's the easiest thing for CFOs to cut because half the time, we all know it as marketers, you talk about it as like, they don't really believe marketing works anyway. there's a huge portion of CFOs, if you ask them, if you read the surveys, that are like, it's just that fluffy stuff. They're talking about creative. It doesn't actually drive anything. It's not true, right? Because if you look at the earnings reports, there's a relationship between those who lean into advertising versus those who pull back on advertising. In fact, we did a study coming out of COVID that showed that, in economic times like this, when you're focused on cost cutting in the short term, it actually takes 2.5 to 3 times the amount of spend to rebound the brand momentum that you're going to lose by going dark over a short period of time. And it's wild that brands just keep doing this over and over again. And it's because they're being informed by tools and processes that are out of date that really don't focus on the decision. So if you go back to the fundamental question we're trying to answer here, is like, how do we determine who gets the budget? It starts with a baseline. So if you think about like where Keen is at, Keen is focused on bridging that gap between ROAS and sales, right? So why does that gap exist? So that's part of the reason that, Nich and I do work together, is really this idea of like, well, how do we translate the work that Skaii is doing into a P&L lens? So building that bridge together creates the foundation that starts to answer the question of who gets the budget. And then I think what you'll see as you go through this is we also then have a solution that really is focused on, well, how do we then, optimize that budget moving forward? So Nich, how do you guys think about like the measurement tools that are out there and, what we need to do? Yeah,
absolutely. I think one comment to add after, listening here is maybe one of the key shifts that it has been made possible through retail media is the fact that this is a closed loop environment. I always use Amazon as the shining example because they're at the tip of the spear. Their share of the retail media dollar spend and .com is really leading the space. And Amazon Marketing Cloud, for example, that sits right inside their garden, let's say, that's able to chew on all of the most important Amazon sales data, the flexible shopping insights, aka kind of like what's happening, at the organic level with the consumer and the shopper. And that ability within one closed loop environment that has an advertising stack that goes from, sponsored products, paid search, all the way up to, CTV and display ads on the open web, all of that's rationalized in one ecosystem, in one measurement environment. That's ushered in an era for marketers that actually can start to the kind of pain points that Bradley was talking about for the organization, can start to really tell a data-driven story around the effect of an assist from a display ad impression on, this one individual's path to purchase, right? And then all the other media touch points. And with that, you start to have, the real argument available for the value of the full funnel. It isn't the question of which half is working. We know it's in the data now, and we can see it because it's all in one ecosystem, in one environment with one measurement paradigm. Now, that gets more complicated as you move across 17, 20 different retailers that have varying degrees of, complexity or advanced solutions to make available for marketers. So
I'd add to that though. Like, I think one of the challenges though is that what we have seen in our data, so we look at a holistic P&L, is that using Amazon as the gold standard is basically like, so that they got ahead, they're first in front of the race, and there's a bunch of others that are catching up to them. But what it's led to, combined with that siloed organization, is we have Amazon leads now that we're working with that are fighting for more dollars. Or you have these legacy mentalities that are like, well, we've always just given 3% of our total sales to Amazon, and we just have done it for the last 5 years, to now where if you actually open it up to what you're starting to say there about the interaction effects between the channels, what we can start to see is that brands actually might be overspending on Amazon. And part of it is because of the fact that they're using these outdated, legacy systems, they're using outdated structures to be able to defend it. But at the same time, there's other brands who are dramatically underspending on Amazon because they can't measure how many dollars are being driven in revenue at brick and mortar from Amazon search. Like, it depends on your category. Like, there's so many categories that we work with where it's like, you're actually looking at Amazon and optimizing Amazon as if it exists in this vacuum. But what we can see is this halo to the brick and mortar sales through a portfolio model that encompasses that holistic nature. And in those brands, it's like, you guys are dramatically underspending because you can't measure, right? So that's a lot of, I think, what we want to talk through here in the next couple of slides. But go ahead if you have any comments on that, or if you want to talk through your
right.
solution.
No, it's a good segue. I mean, one of the reasons why Bradley and I collaborate is that sort of we're tunneling through the same mountain from two different directions. If you think about where we've brought our approach to market for the last 20 years, it's been kind of a bottoms up approach of building technology that helps solve for the most efficient management and execution of media campaigns. Originally that was with Google, right? Then it was social channels, and now there's 80 plus channels in our platform, and that becomes more of a challenge of a one to many. How do I plan across that? How do I potentially shift budgets or measure impact, more looking specifically at the KPIs that Bradley was talking about, that are happening intra campaign, or daily reports coming back from the publisher around impressions, clicks, conversions, et cetera. And there's a lot that can be done to optimize, and that's what we've built our solution upon over the last 15, 20 years. But over time, as that has expanded, in terms of the breadth of channels that we address, more and more executives were trying to figure out, how do I look and manage across all of these, kind of disparate programs? There's apples, there's oranges, there's pears here. We can do a lot as it relates to providing that level of insight across, an executive's purview, how they can manage and kind of have oversight over budgets, look at holistic at performance, use some AI tools to help surface anomalies that are happening, in their programs. For us, that level and view is very important, and can be done just with the advertising metrics alone. And as a plan has been set, potentially as those new dollars come into the system, hey, CFO says I got another $100,000, we can work with them on what if type scenarios using our technology to forecast diminishing returns and figure out where's the next best dollar spent. But what's really important, and something that the other side of the mountain has that Bradley and the team work on, is that tying that down to true kind of P&L based cross-channel insights. So for us, we can take in those plans that that come from the actual P&L data married to potentially every single marketing channel, and then take that data in and tag the campaigns that are running with the interesting meta tags that help automate and operate to the actual business goals, and then give that executive the kind of overview to easily monitor, analyze, and be notified on things that may happen.
Yeah, and like Nich said, that's really where Keen kind of picks up. So Keen is very much a top-down type of tool, where Skaii built themselves kind of from a bottom up, and where we overlap, it creates this really like excellent ability to actually look at all of the dollars in the center of the table to say, where do they get spent with the most impact to optimize for both short-term and long-term. So Keen is essentially an operating system that is really focused on measurement, but also very much focused on marketing optimization and forecasting, right? Because the alternative to this is like, well, I've got my intra-platform or tools like Skaii that measure each individual channel with some interactions. And then I've got my marketing mix models from the traditional players, which are, I've got a deck that they built over a 9-month period. And then he told me my ROI on Facebook was $1.80. And I said, that's amazing. Look how great we are. But it doesn't answer the so what. So that's where we're trying to kind of bring this together, is like, what Nick's talking about is his team is optimizing those channels specifically, looking at the dollars they're spending, the clicks, the dollars they're spending in the impressions, and optimizing all of these executions, which then feed into Keen's data warehouse for the sake of an always-on real-time marketing mix type of experience. But it also then is really very much focused on those what-if scenarios. So Keen's sweet spot is really in this planning and forecasting that answers the so what. So how should I spend differently if the environment changes? How should I then activate that? So the output of our model is actually the budget and the optimized budget with a forecast that then feeds into a weekly buying plan that then closes the loop back into Skaii's system to be able to activate. So at the end of the day, you can actually answer these questions in real time through the combined service of our tool. And that's what MarTech is enabling. And that's what AI is enabling within both of our platforms, is the ability for a marketer to come in and say, how high is high? How much could I spend in every channel and every week to the point of diminishing return? Well, I need to hit a revenue target. and my budget that the boss gave me is 10% lower than what Keen's platform is telling me I need at a holistic level to be able to achieve that target. Well, I'd rather know that when I'm going into annual planning, because the alternative is that I have to run a bunch of gap campaigns and ruin my P&L because I'm behind. And it's like, well, I could have told you were going to be behind 12 months ago. So it's that ability to have that forward-looking lens and then be able to pivot in real time, because you can build the greatest plan in the world, and by next week, most of your assumptions are probably going to be wrong, whether they're good wrong or bad wrong. What we guarantee is that something is going to be wrong, right? The creative's not going to be ready. It's going to have to pivot your plan. The economy is going to do a thing. COVID is going to be a thing. Like, all these things happen that you can't control. And right now it's like, well, let's just execute on these KPIs, or let's use our marketing mix PowerPoint that doesn't really tell me anything because it was built for a world 9 months ago that no longer exists. So essentially, to answer the question of like, how do you optimize? It's really bringing a better tool stack that centralizes decision-making into your mix. So at the end of the day, you either need to do this internally, build that MarTech stack that connects this closed loop opportunity that retail media is enabling, or you need to partner with some folks like, Skaii and Keen, or with your agency partners. Really at the end of the day, the data and decisions from an execution need to feed into measurement, need to feed into optimization, need to be spit out into a buying plan, and then fed into a system like Keen and Skaii. So at the end of the day, yeah, go ahead.
Sorry. I was going to say, I think there's a layer here, people, process, technology. The organizations, the clients that we see being most successful are the ones that are looking at this kind of through that classic consulting firm lens of what is the change management required to actually do this. I think the theory is always interesting. We in technology love to show graphs, like this, that kind of show an easy flow. But the reality is that takes people, it takes process in your organization to shift, and that starts at the top. And so getting the right business case through to whomever is sort of on top of the broader marketing budget, that could be C-level potentially, depending on your organization, and then getting them to think about how does a strategy like this permeate the organization. And a lot of what I've seen is a new layer in a especially a multi-brand organization, or at least a multi-retailer organization, when brands think of retailer as customer. And that layer sits across rationalizing this type of orchestration, especially with retail media as the catalyst to drive that. So that way there is a checks and balances with, the brand owner or brand manager here that has a JBP to hit, that, potentially only owns a Walmart relationship, let's say, or, a different retail channel owner over here is going to have a different approach, and they're always going to want the next dollar to drive their business and make their bonus. So I think that's the biggest layer that I've seen change, is that what used to be kind of an aberration in an organization. Oh yeah, we've got an e-com team that sits over here. The reality is that notion of e-commerce has kind of been thrown on its head, and you may have some D2C, but that layer of investing in digital through retailer, that's helping figure out how the organization should wield shopper versus trade dollars versus brand dollars. That's all being pooled in a more intelligent manner, and in a way that can do that code switching between channel demands and how an executive needs to think about and tweak the business.
Nich, we just had a question come in. I wanted to just interject here. The question from one of our attendees is, would brand owners benefit from a standardized framework to help create efficiency, performance measures, capabilities, etc.?
I mean, I think yes. I think that's the devil's in the details, and the challenge there is that every one of the potentially 15, 20, 50 different channels through which you're investing may make it difficult to create standardization. There is quite a bit of lifting that has to happen, even within a dozen digital channels that all look and feel pretty similar. They may have different attribution windows, or different ways of kind of reporting halo sales or revenue over time, and or limitations on whether or not they're reporting in an omni setting versus just pure play with digital. So back to Bradley's point, like, what is the effect of a dollar spent here potentially over here on a completely different sales channel? So standardized framework, I think I like to talk about like a paradigm. your organization has to have like a measurement paradigm that they all agree upon. And within that paradigm, there could be, layers and different approaches that mean different things, but everybody agrees on some sort of contribution of all of those elements into, again, an agreed upon paradigm. And maybe framework and paradigm could be, fungible in this case. But if you don't have that, and you have each, a variety of nodes in your organization, or different agencies at play across different lines of business, you are going to, just by kind of virtue of that reality, going to be less efficient. You're going to drop some performance opportunity, and certainly not see the interplay or see where, your blind spots are, where you're missing. And I think that's what Bradley's team, I think, really helps call out, getting into the depths of that P&L data.
Yeah, I'd agree with that. I mean, some of the work that we've done with these like it's worse in the multi-brand portfolio companies because there's just more complexity. So stating the obvious, but what we have found is in those engagements, because Keen's solution looks at that P&L level kind of top down, we enable these types of conversations with a solution that hasn't existed in the past, right? Where it's like 100% of my working dollars in service of a brand P&L objective can now be optimized together. So the fact that there's a tool that enables that, one of the biggest challenges that we have is that we're a change management enablement solution. At the end of the day, is like, is there a single organization that is multi-brand portfolio that is ready to just pick up and sign up with Keen today that can, make this thing fly off, off the shelf and execute perfectly? No. And part of the reason is because they haven't had a tool that's allowed them to centralize process and decision and people and all of that. So what we're actually finding is that, one, having a tool to enable that at least accelerates the conversation, because before it was all hypothetical and theoretical. And now it's like, no, I can actually do that. Like, this tool measures that and enables it. So therefore, what we're finding is that we lead a lot of conversations. And again, I mentioned it before, but like the partnering group, if you don't know them, but like they've done a lot of great work with us and some of our clients to say, here's the people and process to make something like this successful. So we actually bring them into some of our like larger enterprise engagements to basically like lay the foundation of the people and make sure it's like we have a data center of excellence. So the data can actually flow in. And then we've got an insights center of excellence, or a pod that's focused on this. And then there is this execution-based group as well, because I can build the greatest plan in the world, but if you can't execute it, it doesn't matter, right? So there's really like those three areas, to Nick's point, around like measurement, look and plan, and then actually executing. And that takes some people, and it takes more centralized decisioning and more centralized process in order to enable it to happen. But I don't think, obviously there's a lot of opportunity to kind of execute that. And it leads people to like not look at solutions like Keen, because it's like, well, we're not ready. Well, the reality is you're never going to be ready, right? Because the world is going to constantly evolve. So you just have to kind of force yourself into that, like, lack of comfort and like how you've always done things, because the world isn't how it always has been, right? And it's like, I'm using these cliche phrases, but it's so true with a lot of the executive teams that we work with, where it's like, right, well, your structure is focused on like, well, how do I throw more dollars at shopper? And it's like, that's fine. But like, how do I throw more dollars at trade? That's usually a bigger landmine political conversation, honestly, on the media side, because it's like, your trade is great, but you're training your customers to basically only buy you when you're chewing into your margin. Well, here's a theory. What if you built brand value? And what if you told people why your brand is so great and why it should be premium? Well, you can sell it at a higher price. That concept is like foreign to a lot of the folks that we work with, because it's like, well, I've said those things, but that's not how we're executing, right? So being able to have those conversations really, it kind of enables just different types of decision process and decision frameworks and execution frameworks within these organizations. Here's an example. So we just want to kind of walk through a use case that we've seen be successful. Is like, so Skaii's providing that time series data and the priors that come out of their measurement platform that can influence within Keen's system. So it doesn't have to be like, well, here's the priors and here's the measurement that Keen has, and here's the priors and the measurement that Skaii has. We're enabling them to speak together to ultimately, for this brand, optimize by channel and really start to see, well, what is the impact of my media on Walmart in-store? And the opposite, which is, what is the impact of my Amazon search spend on Kroger sales, on on Albertson sales. So we're measuring the halos both ways, which enables that smarter P&L focused decisioning. And from that, what we're seeing then, if we double click on the different channels, is that at the end of the day, this brand was looking at the opportunity to copy and paste their spend plan from 23, and it was going to drive a positive return for them. But what they were actually saying, and their board was asking them, is if I put $3 million into retail media and brand marketing, what's going to drive the highest return? So you can start to see here in this future look, like I can actually invest more in retail media. And then the blue line in the center is basically Keen running it doesn't matter what you spend historically. If I spend in every week to the point of diminishing return, how high is high and what channel has the most impact? And retail media is the answer, right? At this stage for this brand, it's a fast moving CPG grocery company that we're optimizing here in this example. But it's really saying like you have the largest opportunity in retail media. And when I double click on that for this brand specifically, and this is not uncommon, Instacart earnings report was just released and they're doing great. But the problem is that we're still seeing that folks are dramatically underspending on Instacart. And a lot of it, when we double click on that with them, is like, they just don't feel like they have the good tools to be able to like rationalize the increased spend on Instacart, even though they're becoming more transparent with their performance and information. There's a pretty substantial upside that we're seeing with a lot of brands on Instacart. Now, the headline isn't like Keen is telling everybody to go triple their budget on Instacart. It's dependent upon where you are and the environment and things like that. But for this brand, Instacart has the greatest opportunity for them. And then the interesting thing on that is because Instacart is the biggest opportunity, part of it is because of how much they're spending on Amazon. So this brand, like a lot of CPGs today, launched on Amazon, launched in D2C, and then gained their brick and mortar presence, and their TDPs have been growing, pretty dramatically. And they're able to then support and look at those halos from Amazon search leading to those like Kroger dollars and leading to those Walmart dollars because they're able to measure those halos. And the really cool thing about Keen being able to bridge that ROAS gap is that we're able to measure that long-term impact of each of those dollars to be able to justify marketing from a brand net present value perspective. So we're introducing financial language and future look into these brands. So the red line that you're seeing represents marketing's contribution or incremental contribution. What traditional players are typically doing, whether it's marketing mix or whether it's ROAS metrics, is they're only looking at like 30, 60, or maybe 90-day returns. Keen has a proprietary ad stock or decay rate that is a 6-year decay rate into the future that's able to measure that incremental impact through time, which ultimately is why we're able to forecast within a 4% margin of error. Because if you don't have the right ad stock and decay rates built into your marketing impact, you're going to be off by this much in the red that you can see here in that thin line that continues from 22 into 23. You're going to be off by that much in the future. So it's being able to take that information to tell the story about where you'd spend incremental dollars, what channels have the best budget and the most upside to produce that buying plan that then feeds back into Nich and his team for execution.
I like to think that we're down in the engine room of the Titanic, not the Titanic, sorry. We're down in the engine room of of the ship here, ensuring that, as we're underway, we're getting the signals at a much more rapid pace, daily, intradaily sometimes. And our automation, our bidding algorithms, all of those tools that are in place are ensuring that spend within that channel is performing. But we're also looking at that across all of the different channels, in the 80 plus channels in our platform. And we're helping in that kind of intra-cycle way ensure that, you're meeting the goals. We're also tagging the data that's in our system with the benefit of a lot of these plans, especially if they do come with a lot more business logic around what is the goal for a given product? Is it sell through? Is it sell out? Is it, a profitability target? Those are things that like your marketing organization or your agency may not be naturally chewing on today, nor does your executive, or if you are an executive, are you having the kind of perspective across these investments in an intra kind of program oriented way. Usually that's going to happen at a certain executive level. You'll get an update on every couple of weeks, every month. And it's sort of like, okay, well, crap. All right, that happened. I didn't get to react to it. What if I do have more budget? We are performing well. We're scaling. Where do I put it next, right? And that's a layer
those are some of my favorite conversations with executives of like, well, Keen, you told us that we were going to hit this revenue target. How come we didn't? Let's look at the buying plan against what you actually spent. And it's like, well, you didn't spend what we told you to spend, and you expected the same result. So, and a lot of it's because they don't have the tools that can realize that, like, we put so many parameters around the buying in order to protect our brand, in order to say, don't buy on these channels, that we made it impossible to spend the amount. And it's like, well, no one's catching that, right? Because
they may respond and say, I didn't know, I wasn't aware. This is like sitting in a congressional hearing. We try to make it very, very transparent for not only the activation team, the hands-on keyboards team that might be leveraging the nth degree of our platform, but the executive layer that really gives that level of insight, those notifications, the AI that's helping look for the anomalies in the business and tell you what that is and what relative meta tag in the business, what's the business rationale for why you may be where you are. It could be a competitive insight too from the channel, and that's an area where layering in third-party data sets that are tracking what's happening inside the ecosystems of these retailers can start to give the ink line around the drawing of your media. And so for us, right, we're inside the machine. We're helping to optimize, continue to plan and forecast kind of on an intracycle manner. And then, even run some of the marketing sciences oriented tests and audits, incrementality tests and so forth, to really help drive the performance and then feed that data back, to Bradley's point, in kind of a circular way when you saw in all those slides, back into those broader planning cycles in a time series manner. And again, so from our perspective, it's having that end-to-end kind of full closed loop planning cycle, activation cycle, transparency at the executive level.
Yeah, and the thing I'd conclude with for the organization, or for those watching the webinar here, is that your organizational structure and process, like, now is the time to kind of think about shifting that, right? Retail media platforms and their growth and the opportunity that Nich was talking about at the beginning of this, of like, if you find the right audience, like, you should be able to reduce the CAC, like, you should be able to increase the returns that's coming from this personalization opportunity. I don't look at cookieless in the Keen's lens as it's really kind of allowing people to move away from the distraction, I think, of what MTA has done to the industry. Is like, multi-touch and last touch attribution from our perspective has led people to making P&L decisions that are not favorable. But now what we're seeing is like the new retail media platforms, and the opportunity is just going to accelerate and really expose how like inefficient your current process or org structure is. So really put some intentionality around, like, do we have the right org structure? Do we have the right process in place to take advantage of what the retail media networks are enabling? And then ultimately, do we have the right partners, and do we have the right tech stack? Because, ultimately there's tech enablement that is being underutilized right now in marketing. In fact, there's like a lot of talking heads that talk about like marketing mix is one of the last, in the industry in CPG to be revolutionized with like AI and like technology and, true modeling. So it's a huge opportunity. And that's why marketing mix is so hot right now. Like, cookieless is leading people to say, well, how do I measure? How do I execute? And it really is this like econometric approach that Keen uses. It's a Bayesian approach that Keen uses to say, how do we take knowledge from someone like Skaii, build it into a process to make decisions? And then how do we close that loop to actually bid and buy through Skaii's platform, and then feed that back in to really enable ourselves to become an efficient organization? So I appreciate everybody taking some time today. Nich, any final thoughts or comments from you?
Yeah, one question that actually came up from one of my clients as I was actually referencing your team that I thought might benefit the audience was really this notion of, hey, I'm a multi-brand organization. We are siloed. Can I, do I need to have or go collect all of the P&L data across all of my different sister brands in the organization? Do I have to go, manage that process, or is this something that I can do, within my own brand or my own retailer? And then kind of at what degree of grain can I do that?
Yeah. So we have folks that we refer to as decision frames. So I have Amazon ecom managers who the response variable is optimizing for Amazon first party sales. And all I'm looking at is optimization for Amazon spend within Amazon. And then I've got folks who are brand managers who are optimizing, because I'm pulling POS data from our partnerships with Nielsen, IRI, and Spins. So I'm actually pulling the data for brands. And in that case, I'm building a brand model where I'm just looking at like total brand, or it could be broken into like sub brands and things like that. And that's where I can like optimize, a single brand. And then the ultimate is our portfolio capability, which is that third layer up. That is the CMO saying, I've got responsibility for these 8 brands. How do I bring my organization? Most of the time, we're actually starting with a single brand and then expanding to a portfolio, because we're the shiny new toy that brand manager who's innovative is using. And the other brand managers who are lagging are like, whoa, what is that thing? It's enabling faster decisioning. And, it's kind of enabling those challenger personalities.
Yeah, if you just say Bayesian regression when you're in your meeting reporting next to all of your other brand managers, I think you'll probably get a win.
Yep.
Looks like Michelle has a question around, does Skaii have access to the retailer's data to include in the optimization? Absolutely. So we're really only limited by retailers' exposed data. So for an Amazon, for example, we can and do pull in every single data set that they basically make available, from first party sales to what's happening in a marketplace account, a third party seller account, the flexible shopping insights paid data set if you're a larger brand, all of the advertising metrics, anything out of Vendor Central, as I already mentioned. So that whole corpus of data we're chewing on and helping give a holistic kind of retail intelligent suite of data for the management. Other retailers have differing limitations. We happy to go into details on what that looks like, but definitely always have the full gamut of advertising data. Typically the nuance is going to be how much of their retail data, or if they're an omni retailer, their offline data are they sharing, and does that then need to be stitched in with to your point on a Nielsen or IRI data set, then that can be stitched in as well. So we're usually pulling in dozens of disparate third party data sets to augment what we get natively from a channel.
And
Mark,
we have another question that just came in, gentlemen. Where are RMN budget dollars primarily being set? From traditional media buys, other consumer DTC budgets, trade marketing, promotional dollars, other?
Yeah, I could take that. From what we see right now is there's not a fixed number. So if you're looking for like, what is the magic number? I don't know if that's implied by the question, but I really, it varies pretty dramatically. And there's not even really a trend right now of like what percent is in retail media. What I can tell you though, is that what we're seeing is most fast moving CPG companies that are focused on retail media, their budgets for retail media are somewhere between 10 to 40% of their budgets. And it depends on where they're at in their maturity curve. So what we're finding is that a lot of the small challenger brands are spending heavily 40%, but it's a really small budget, right? Because they have more presence and more velocity on Amazon, therefore they're spending more there in their retail media. More of your traditional players are in that 10 to 30 range, with the ones who are leaning in to retail media around 30% of their total budget. But again, it varies pretty dramatically. But most of those budgets are being fueled not by incremental dollars. Unfortunately, that'd be great for any marketer that's on the line. They're actually being shifted traditionally from trade and shopper is what we're seeing. Or the worst part is that they're actually being pulled from the top of the funnel. So right now, our models would encourage, we did a pretty large case study with Ibotta to kind of validate bottom of the funnel spend. Your optimal mix is 50-50 top bottom if you're trying to grow toward revenue. If you're trying to grow toward long-term profitability, it's a 70-30 split. But unfortunately, what's happening right now is if you're not willing to move dollars from trade and shopper, most of the dollars are being pulled from the top of the funnel and heavily weighting the bottom of the funnel, which is leading brands to basically where we are today, which is I'm overspending at the bottom of the funnel in RMNs because the retailers are making me do it. And I'm not adding incremental dollars to balance. Therefore, you're seeing what you're seeing in these earnings reports, which is I've lost touch of building a brand and I'm throwing all of my dollars at performance and it's becoming more expensive. And that's really the challenge that we're seeing on our side. Nick, what do you guys see in your data?
Yeah, I like the it's difficult to identify an answer here when you have a different breadth of different size companies. You could look at like a marketing budget for a D2C company. It's might be a monolithic budget that, there is no notion of brand coffer versus trade versus what it's like. We've got marketing dollars, what's going to get us the best, top line growth number, go. And there may be some brand tactics that are included in that, different parts of the funnel within retailer, especially within Amazon. Amazon, for their part, is actively and has targeted all of their sales organization with trying to sell into the upper funnel, get their endemic sellers to adopt kind of mid funnel, I call gateway ads, that help them learn to start investing in upper funnel. And some of the biggest budgets in the world, we're going into TV forever from big brand dollars for those big brand organizations. And as linear TV starts to, I think we just crossed over sort of the line of CTV adoption compared to linear. And that's typically where kind of this big pile of money is going to, in growth of RMNs from the biggest brands that I've seen. Is we want to invest more in this more targetable, more transparent upper funnel opportunity of CTV. I can address audiences. I can do unique creatives. My AI tools are now allowing me to create a dozen different creative types that attract a dozen different important audiences to my brand versus one brand message. So I think what we see is these retail organizations asking more of those diminishing TV dollars. I think it's why you see Amazon booking Friday, Black Friday football games with the NFL, right? There is a clear and obvious shift here happening of these retailers understanding just how valuable their first party data is to go and attract those enormous large brand dollars that especially within the head of the market. So while there is all the machinations of trade and promotion within kind of the quarterly filings, around performance of to goal in an intra-year basis, but from a macro perspective, I think we were seeing kind of retail media try to go eat up the dying TV market.
Okay, well, thank you, Nick and Bradley. I don't see any more questions right now, but if any of our attendees have further questions, you can reach out to Bradley and Nick directly. Their email address is on the screen right now. So thank you both. That was truly outstanding, very informative. And thank everyone for attending. Have a great day.
Take care. Thank you.
Thank you.